The New Zealand versus US dollar moved sharply lower in the Asian Pacific session. Why? Because the Reserve Bank of New Zealand cut rates by 50 basis points. It was about a 50-50 chance of a 25 or 50 basis point cut. They went with the higher one, signaling additional rate cuts potentially in the future. That sent the pair to the downside, but we did find support near a swing area. I'll talk about that and the rebound and what the risk is for sellers going forward. So let's get started. I'm looking at the daily chart, and I have it really pushed out. Why? Because I wanted to show this area right through here. This was a swing low right here, which led to this sharp rise. This was another swing low that led to this sharp rise. That developed this swing area between 0.5739 and 0.5772. You can see that the price low came in around that area right through here, tried to bounce, and then fell below that level, increasing the bearish bias through here. We moved back up to the high of that swing area here before rotating to the downside again. We had other different swing highs in here, followed by prices moving above and below that level, and it was until this point right here, which was in the month of April, that the price rotated higher away from that level. We came down to that level area again in trading at the end of last month, finding support buyers moving higher, and in trading today we came down to the low of the swing area, moved just a little bit below that level, but found support buyers and is now trading higher. If I were to take spread it out a little bit here, you can see how the price is back above the high of the high of this swing area at 0.5772. That is somewhat more positive if the price can stay above this area. However, what is probably a more important level to watch for sellers looking for more downside is this level right here near the 0.5802 level. That level represents a 50% retracement of the 2025 trading range. And we in trading yesterday, we came down toward that level right through here, found buyers against that level, but in trading here today, the price peaked at that level and rotated to the downside. So getting back above that 0.5802 level, which also happened to be this low right through here, going back to the month of August, would be a disappointment for sellers looking for more downside momentum. What would give the sellers more comfort is if we start to move back into this yellow area here and start to make a push back toward our the low price of the swing area, and ultimately break below the 61.8% retracement. That would open the door for further selling momentum. So watch this level on the top side. Watch this level right through here in the short term. If we can get below those level or stay below the 50%, get below the 0.5772 level, we should see a rotation back to the downside in the New Zealand versus US dollar. Absent that, and the battles on between the buyers and sellers with a move above the 50%, giving buyers a little bit more of an advantage on the failure of the break below that level. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.